Hello and welcome to today's update. Today is 12th of October. You're looking at a daily chart of S&P 500. S&P 500 closed down almost 12 points to close at 3577. Nasdaq 100 lost almost 6 points to close at 10,785. We did get two reports today. First was the PPI and then the FOMC minutes. Neither of them moved the market. The market is basically waiting for, I think, the CPI report tomorrow. You can see today's, today's candle was a inside bar. You can see this candle right here. Volatility compressed today. You can see that it traded inside the previous day's candle, and previous days was a doji, which is basically an indecision candle. I think the market is basically waiting to make a decision tomorrow. Nasdaq, the daily candle also looks similar. You can see today's was a inside bar. So this is an inside bar, and yesterday's was an indecision candle. So I think all eyes would be in tomorrow's CPI report. Now let's have a look at the CPI report to see what can we expect. So tomorrow what we are expecting is the CPI to come in around 8.1%. So this is the consensus expectation, 8.1. Last month, the consumer price index rose at an annual rate of 8.3%. So this would be a small decrease if it comes in at 8.1%. If we look at the trend, we'll see that in June we had inflation rising at 9.1%, and then 8.5 in July, 8.3 in August. This month, for the month of September, market is expecting CPI to rise at 8.3%, which would mean that the CPI is basically coming down. So that's CPI. Now let's look at the market and see what can we expect. So before that, I want to show you something else. So I wanted to bring your attention to this sort of this area right here. So effectively what you see is that you have four green candles and then this big red candle. So what was happening was that market was rising ahead of last month's CPI. So when the CPI came in, it was above expectation, and then you see this big green candle. S&P 500 was down 4.32%. After last month's CPI report. So now what we see is just the opposite. What we see is we have 4 days of decline ahead of the CPI. Does that mean that this time we're going to get a green candle, which would be just opposite? Because last month market had rallied ahead of the CPI, but the CPI was stronger, so the market fell. This time the market has been declining ahead of the CPI. Does that mean the CPI might be weaker than expected, and then we might get a big green candle? Well, we'll see. We'll see, but it's it's quite interesting to observe these things. Now let's come back to what are the possibilities for tomorrow. So I've got two charts here: the 10-year bond yield on the top and S&P 500 weekly on the bottom. Now market is expecting 8.1% increase in CPI. Let's say the CPI comes in above expectation. Let's say 8.2 or 8.3%. If that's the case, then I would expect the bond yield, this is 10-year bond yield, which closed at 3.9%, to spike. I have a horizontal line here. This is the 4%. This is an important level. If CPI comes in hotter than expected, let's say 8.3, I would definitely expect the bond yields to spike and possibly go above 4%. 4% is an important level. Just like 3.5% was an important level. when the bond yield crossed this 3.5 level, it went all the way up to 4%, and that put tremendous pressure on stocks. So if CPI comes in above expectation, let's say 8.3, I definitely expect it to push through, maybe go up to 410, 420, who knows. What that basically means is it's going to be putting pressure on the stock market. You can see that 10-year yield is just below the important resistance. Just like S&P 500 is just above an important support. S&P 500 is just above 3,500. I mean, it closed at 3,577. This 3,500, this is where the 50% retracement fib is sitting. If you draw a fib from the COVID lows to the highs set early this year, the 50% retracement is around 35. So if bond yields push above 4%, I would expect S&P 500 to break the 3,500 level. You can see 3,500 was also a support in March. In which case, the next level, which is the pre-pandemic, that's around 3,380 will come into play. In fact, if there is a big spike, we could see a waterfall, movement in S&P 500. So 3,500 could be at risk. 3,380 could also be at risk, and we may have to consider the next level, which is 61.8 fib, around 3,200. So that's if the number comes in above 8.1 and the bond yield spike above 4%. 4% is a very important level. So we could have a big decline in S&P 500. The corresponding level on Nasdaq would be so Nasdaq is just above the 61.8 fib, which is around 10,600. Nasdaq could close 10,785. So if bond yield spike, I would expect there to be a big drop in Nasdaq, possibly go below the 10,600 level, and that brings the pre-pandemic high, which is around 96.61 in play. So this is scenario one if the CPI comes in hotter than expected. What happens if CPI comes in below expected? So market is expecting 8.1, let's say it comes in at 8 or 7.9. If that's the case, then definitely I expect bond yields to pull back towards the 3.5%, because that would be a big relief, because then there would be a clear indication that that perhaps the inflation has peaked at 9.1, right here. So if CPI comes in around 7.9 or 8, you might say that the June level of 9.1 probably was the peak. So if that's the case, then I would definitely expect 10-year bond yield to move towards 3.5. And that basically means that I would expect S&P 500 to get a big green candle and move higher, and S&P and Nasdaq to also move higher. So if that's the case, what level can we expect S&P 500 and Nasdaq to move to? So if we look at the daily chart, so if CPI comes in weaker than expected, 7.8 or 7.9, then certainly to this level, which is around 3,800, and possibly to this level, which is around 3,900. So this is on S&P 500. If CPI is weaker than expected. For Nasdaq, those would be first of all 11,650 and then almost 12,000. Those would be the levels I could see the market bouncing to. That would be obviously positive, because the market has declined quite a bit, oversold, so you could easily have a decent rally, especially when CPI comes in weaker than expected. Now, what happens if CPI comes in just in line with expectations, say 8.1? Now, 8.1 is high. You know what I mean? 8.1% is high. You could still say that 9.1 probably is the high, that inflation probably would not go above 9.1. But if it comes in at 8.1, which is what the market is expecting, I think that might be a relief to the market. Why? Because the market has been falling. You see, market has been since mid-August, Nasdaq, S&P 500, all of them have been falling and they're down quite a bit. So there might be some relief rally. I wouldn't expect there to be a huge move to the upside, but because they're oversold, there could be some oversold bounce. Possibly to this level for Nasdaq, which is 11.6. For S&P 500, it could possibly go up to 3,800, but then kind of wait and see, wait for further information. So that's how I see market faring. Because what happens is that the markets are at support. You can see S&P 500 is at support. So if the number is strong, you can easily see the support breaking. And when it breaks, I don't think it's gonna fall by a little bit. I think it's gonna fall by quite a bit, because I do expect the bond yields to spike. If it's 8.3, I definitely expect the bond yields to spike and go above 4%. And if bond yield goes up to 4.1, 4.2, I mean not tomorrow, but in coming days, I can easily see a big drop in the market, in S&P 500, in Nasdaq, SPY, QQQ, whatnot. So that's how I see it. If we look at the dollar quickly, because dollar is also going to be impacted, you can see that it's still in an uptrend. Now I'm focusing on this bit right here, the recent. To me, as the price goes up, I can see that the momentum indicator like RSI, it doesn't look very strong. It's it's well below the previous high, so that's looking kind of weak to me. And even the MACD started to kind of move lower. So that looks unless unless S&P unless the bond yield spike, then we could see a big rise in dollar index also. But at the moment, it's looking kind of weakish to me. But there is, it remains very much in an uptrend. Even if it pulls back to the bottom of the channel, it would still be in an uptrend until and unless it breaks. We'd have to basically consider any pullback within the context of this uptrend. If we look at VIX, VIX is, again, you see it's right at the previous high, which is around 35. So VIX is also at an important level. If the number comes in, CPI comes in hotter than expected, we could see a spike in VIX. I've got a channel right here. The upper end is 35. But if CPI comes in weaker than expected, then we could see a move back down to the middle of the channel, which is around 27.5, 28 level. So VIX is also at an important level, previous high. You can see there was quite a bit of interaction at this 35 level. So it's also at an important level. I mean, if you look at some of the large cap stocks, they're also kind of at a support level. If you look at Apple, you can see that it's right at previous low. So weaker than expected, we rally. Stronger than expected, we break. Possibly, bring this the June lows in play. If you look at Tesla, Tesla has been falling. It's now just above the previous low. So it has gone down quite a bit, oversold. So again, there's weaker than expected. We expect Tesla to rally because I think Tesla is going to move in line with the overall market. If you look at Microsoft, you see it's now at the bottom of the channel. Again, it's at support level. Weaker than expected CPI, we see a bounce. If not, we see a continued selling. If we look at Google, Google is again just above the previous low. Again, this is a near-term support. If we look at Nvidia, that too is bottom of the channel. So we've seen bounces of this level. So weaker than expected CPI, we expect a bounce, or else it can break to the downside. Even Netflix, if you look at Netflix right here, you can see that it's just above support right here. So again, weak reports, we get a bounce. If not, support is broken. So in conclusion, the point I'm making is tomorrow's CPI report is very, very important. And depending upon, what happens, we would expect some kind of a move, because if you look at today's candle, if you look at today's these are indecision candles. This is inside bar, and the previous candle is also doji, so these are indecision candle. I think a decision will be made tomorrow, one way or the other, either to the upside or to the downside. But I do want to remind everyone the pattern that we had previously, and what we are seeing right now is just the opposite. 4 or 5 days of decline ahead of CPI. Last time, 4 days of rally ahead of CPI, big drop. Let's see whether we get a green candle here. Well, I'll come back with another update tomorrow. Thank you very much. If you like the video, please consider subscribing and sharing the video with somebody. Thank you very much.